Good afternoon, ladies and gentlemen. The time is 11:31. Today is the 15th of February, and first of all, we've had an intense week so far. So going into the weekend, we had a lot of negative global cues, and we had everything to do with Russia. We had a little bit of bad local cues as well. So a lot of people who had easily sold the 17,000 put option and below, they really would panic given that the kind of market that played out on Friday in the US. Monday morning, they'll have to cover. So that did present an opportunity, but I chose not to trade yesterday. So yesterday, actually, I started tracking the trade I would like to enter. It was trading at about 150. So I wanted to enter the 16,500, 17,300 strangle yesterday. I literally watched it fall from 160 rupees all the way down to 100 in the first 1.5 hour itself. So it was technically an opportunity loss. But to be honest, these kind of days, they can go either way. Like people think when it's panic and they're like, oh wow, 16,000 put option is trading for more than 30 rupees. That's huge opportunity. The biggest opportunities also come with the biggest risks. It's just that more often than not, those risks do not play out. It doesn't mean the risk doesn't play out. So in my style, at least the one I'm going with now, I don't want to trade outliers. There will be days that will be extremely good or that can be extremely bad, and I would like to eliminate both of those and instead just focus on the days where I at least have some sort of predictable outcome, right? There's some sort of predictable outcome as to how the day can play out. So I didn't take an entry yesterday, my entire day yesterday, so it's completely empty. No trades yesterday, and I fell asleep as well, so I couldn't. I wanted to buy some cash stocks. I didn't end up doing that. I ended up buying a little bit in cash today. So anyway, a lot of panic. This, that, what will happen over Russia, whatnot. Implied volatility shoots up. Nothing really happens. Putin makes some statement, and now people are fine. They're not so afraid anymore, whatever. And because of that, the idea was that yesterday's bottom that we made, this particular low, should hold. I mean, there's no reason now that after US markets relatively were very calm yesterday. Nasdaq was positive. S&P 500 also never went beyond like 0.7% negative. So it was never really down, and it was relatively mum. And the idea is that, okay, given that and that US futures are in the green today, this particular low most likely is going to hold. And what's going to happen if this particular low is going to hold? There's going to be an IV crush because the entire IV spike took place because of this gap down and this down move, right? So around here, it was actually a pretty large IV spike into the last 30 minutes on the Nifty. And the idea was, okay, that'll get crushed. At the open itself, there was a bit of an IV crush, but it continued to happen. So here I entered my position, which was 17,300 call short and 16,400. Why those two? Because 16,500, 17,200 have a huge amount of call side open interest, relatively the maximum, right? And for obvious reasons, even if you go by 16,500 is the round number, and because 17,300, this is where from here we gap down. Naturally, I want to be in places where people won't be too quick to cover. The IV spike that was there continued to cool off. IV continued to cool off this entire period. And about here, I was in about 13 points of profit. And now 13 points of profit, I want to lock in. Also, my position, I never neutralized the delta into the down move. Idea being the same, that this most likely is going to hold. No reason for it to break. Now, after this particular down move took place, just as we were forming this candle, I took my exit because the idea was to lock in 10 points. So my trailing stop loss that was there, it got hit. Probably not the best exit, but whatever, it decided on doing that. So I ended up doing that. This was definitely, this exit I could have waited to confirm whether it's going to be a higher low or, even based on the average price of the option. Or even the swing high of the option I could have set as a logical stop loss. But the idea was, okay, I'm going to lock in 10 points here. And I did. So actually, if you think about this was a greedy move. The greed to lock in that profit there. One way of looking at it is I got greedy. The other way of looking at it is saying that generally the system I follow, it says, boss, if you made 10 points, you trail from there. Especially if you've gone up to 13 points of gain and from there you've come back to 10. Anyway, it's a matter of perspective. I won't think of it too much. I'm happy with that decision. And from here, after I took the exit, I exited Yeah, I exited these two for about good about I think 48 rupees between the two, and obviously the position was with a positive delta. So yeah, I exited the two for about 47, 48 rupees. It came down all the way to 40 rupees, and now because of the up move, the call side, there's a spike in its trading. So it's okay, it's all good. I might have got a better trailing exit, but that's all well and good. And after that, I also tried to take a quick scalp trade by shorting the 16200 and 17300. That gave about 1 point of profit. The trailing exit was cost. I exited it at cost. So that was the summary of the day. See, I think the way you should look at it is I don't like trading anomalies. I don't like trading on days where there you can make 30, 40, 50. I mean, obviously, I would like that 30, 40, 50 points on a regular day like a Monday or Tuesday, but potentially give up a lot more. It is unpredictable. I mean, a lot of people say huge opportunity. Oh my God, you could see 15,500 put option could be short. That's how everything presents itself. Like even like during the corona crash, when you had like this steady spiking of IV, everything seems like an opportunity first, and then you realize that there's a cost associated with it. When fear spikes, most of the time people say, okay, fear spikes too much. Most of the time it does, but when it actually plays out, it can be much worse. So anyway, this technically an opportunity loss, but I'm happy with that. And yeah, that was the end of the trading day. It was a relatively simple idea that yesterday's low should hold. It held, and I got a decent enough gain in the first 1.5 hours and took the exit. So that's about it. I think my only thing right here would be is look, if we continue to be weak for a while, do consider adding stocks in cash. You don't, I mean, don't buy the dip with leverage. Everyone has this thing that, okay, if the market goes down, I'm going to sell put options. I'm going to like do that's fine, but do it. Most people don't know how to use leverage. If you people say I will do cash secured puts. Now, if you have 10 lakhs in your account and you sell cash secured puts in 5 stocks and there's a down move in that in the market, you're not going to be taking delivery. You can't take delivery of all, and you're going to be on a huge mark to market loss as well. So that doesn't make sense. We have 10 lakhs and you sell one cash secured put. That makes a lot of sense. Or like if you have 10 lakhs and you're like buying cash stocks, that makes sense. Don't ever buy the dip with leverage. It comes with its own consequences. And while most of the time those consequences don't play out, it'll be quite bad when it does. So like, yeah, just think about that. Whenever market is going through a phase like this where there's geopolitical tensions and anything can happen, there can be big moves. Like people say, okay, last time nothing happened when Crimea, whatever. It doesn't mean that this time it doesn't have to happen. This time it could be. I'm not saying this, but like there could, if there is, for example, a direct conflict between NATO and Russia, that will have its impact on the market. So yeah, at times like this, just stay light. I mean, if you can, just trade intraday and try not to take positional exposure. And over and above that, yeah, just be sensible with your use of leverage in positional trades. So that's the end of that. Anyway, my day is done. I will come back tomorrow. Tomorrow on Wednesday, we'll see what happens. As of now, I would think that 17,200, 16,800 most likely. In fact, 17,100, 16,800 most likely where we expire. But yeah, that is in normal circumstances. Difficult to really try and predict what the market will do in yeah, now if you see this call option has actually shot up. I mean, this has gone back to a value of 48, the price where I exited. Because when the market gets super heavily shorted, the short covering will be just as quick. Yeah, on either side of the market, staying light is important. Thank you so much for watching. Have a great day. Take care. Bye bye.